First of all, we're talking with Gerard Gibert, who is the host of the JT Show coming up at 10 o'clock this morning. You gave testimony before the Legislative Committee. First of all, for our listeners, the reason you were called in is because of your expertise.
Well, and I'm going on at 2 today. My testimony is scheduled for 2 o'clock today.
So therefore,
I'm going right
you didn't
from the
dress
show.
up. You didn't dress up to come to the show.
Negative.
That's all right. That's okay.
I still respect you.
Well, respect and smoke the cigarette when it's over is fine. That's all we ask for. Tell me exactly what happened, and as far as your expertise, when you agreed to do this, you bring forth a lot of business experience.
Yeah, well, obviously operating a business as an entrepreneur here in Mississippi, as I did for 33 years, fairly familiar with the implications of taxation on businesses. And of course, any good entrepreneur knows that the true precious asset of their organization is their people, and they want their people to thrive and to prosper. And I believe that cutting income taxes in the state of Mississippi is a way to achieve that goal. We entrepreneurs really can't get it done without great people. So
to set this aside, you are for, not against, as far as the cutting of the income tax.
I am. I'm for that.
The major thing is how we do this. Did anybody arrive at anything yesterday? Some solutions on how to get it done?
Well, as you are aware, the House did draft a bill, wrote a bill to achieve that. And when it was first introduced, I think most folks have a tendency, the human nature says, well, I see that there's going to be an increase on sales taxes. Mm-hmm. Oh, they're raising taxes without really considering the impact of cutting and ultimately totally eliminating income taxes. And so the term you hear tossed around a lot is, well, it's just a tax swap. And that's really not true. So, I got curious that my analytical sensibilities, and I guess as a CEO, I learned, you've got to surround yourself with great people, and you've got to consume their inputs and their advice. But sometimes you got to do a little of your own checking. Yeah. And I'm fortunate in that academically, I'm trained in accounting and economics. And I ran a business that had a high degree of focus on implementing what are called ERP systems, financial systems. And then, of course, engineered a successful acquisition strategy in which I analyzed over 60 confidential information memorandums that were jam-packed with some very complex financial models for IRR and ROI. And taxes are always a big part of those models. And so learned a lot about that. I've just kind of been a student of tax and tax policy for a long time, spoken a lot about that. So I took the liberty of putting together some tax models to say, okay, well, this is what the present situation is. Mm-hmm. What does it look like? Should we implement this law as drafted?
The effects of the cause and effect.
To an individual. Yeah. So I put together models. And actually on the text line here, I had several listeners that said, well, this is just a tax swap. My taxes are going to go up. And I tried to explain the nuances there. And I said, if you'll send me your personal information, I won't disclose it. I won't reveal it to the audience. I'll run it through my models, and I'll get back to you. And so I spent
Did anybody do that?
They did. I spent several hours at the house working that through my models and went back to people.
What did you do when you go home, Paul? Nothing.
And
you can tell somebody who's an accountant, no wonder they're in good shape, because they don't forget that's how they consume calories. All right, go ahead.
Well, so, a lot of it was just to satisfy my own curiosity, honestly. Before I could dig in and say I support this, I wanted to know.
Did you get that information back to the sender?
I did. I got the...
did you get a response?
Yeah, many were positive. Okay, well, that's different. So my initial model, I took 1, 2, 3, 4, 5 typical cases of individuals and married folks. And so, for example, an individual that makes $25,000 a year. All right, so I figured in what they're going to pay in federal income tax. I think what a lot of people don't realize is just how much of what they spend of their disposable income is on items that are not subject to sales tax, such as your rent, your housing, your mortgage, your insurance.
The big items.
Your energy, your health care cost, your gas. For example, the fuel you put in your car. None of those are subject to sales tax, pharmaceutical prescription drugs, professional services.
But it is a tax. can argue with as far as gasoline, it is a tax.
But it's not a sales tax. What I'm
you.
saying is that this particular bill does not raise taxes on gasoline.
It will not affect taxes.
That's taxed at the excise level, the per gallon tax, as opposed to sales taxes. And so I just put models together and say, okay, what does it look like? I actually use H&R Block. I have a deep understanding of taxation, and I use H&R Block's tax tool to compute their federal income tax, because you got to know what their disposable net income is.
What does it look like at $25,000?
$25,000. The net is a $412 to the good benefit. I found no case where someone
yearly,
annually,
annually.
$412.
But that's in the poverty level at nearly at $25,000.
It's equal to our per capita income.
Yeah,
it's just $24,000. Our household income. The median household income is about $45,000, which is $20,000 less than the nation's.
When the speaker was on yesterday or day before yesterday, he was talking about it. I think in the $40,000, it's around $1,400.
At $50,000, I got $1,502. So our numbers are pretty close.
But here's the thing, and again, Gerard Gibert is with me this morning, and he'll be back to talk more about this coming up at 10 o'clock this morning. When's the meeting on?
2 o'clock. I'm on. Yeah.
And you and I know this now in your post-CEO and doing a talk show.
Yeah.
You know this, that when I've learned this a long time ago as far as broadcast and journalism is concerned, you can be, when you're talking to somebody, you've got only a few seconds to make that pitch, number one. Number two, even if it's a guy with a Harvard education, you've got to give it to him simplistically, because they'll rebuff it.
No question.
No, I'm not saying anybody's out there dumb or anything.
Yeah.
We even had newspaper people saying, if you're going to write an article, you better write that article at eighth grade level.
Yeah.
Because people are so busy.
Yeah.
So I can sit here and you and I can say, make a sale right now. Somebody's going to say, well, my God, yeah, I'll get $1,400 back, $2,800 household income.
Yeah.
And you know what? If I buy a car, it's going to cost me $400 more, but I'm going to buy a car every 5 to 7 years.
Right.
But I'm going to get that $2,800, $2,400. And then somebody in the parking lot before they get in the car says, man, I heard you. You realize this is a tax swap.
Yeah.
It's going to kill us.
Yeah. No, you're precisely
and we've lost
right.
the sale.
And so the narrative takes kind of a life of its own, and there are a lot of people that actually think their taxes would rise as a result of this, and I found no cases where that would be the situation.
Let me get back to the fundamentals of this, though, since you are deeply involved in this. How do we do it, Gerard? I mean, because every time we get close to it, like, for instance, the farmers out there, whenever there's somebody who's going to pay more, they've got the political pressure with their organization. God bless them, whoever it happens to be. Then it goes back to the people who don't have lobbyists.
Right.
When we come back in the
That's
short
government,
segment,
isn't it?
Yes. I think I just defined government, didn't it? We'll talk about that in the final segment with Gerard Gibert. And I'm sure you're going to talk more about this during your show. Who's your guest today?
Yeah, I got Grover Norquist.
Oh, yes,
coming
he's coming
on,
in the
and
studio.
he's going to testify.
He's going to be there.
Right. And so, and I need to be clear as well. I totally support elimination of the income tax, and I'd love to and would like to see us do that without increasing any taxes. Mm-hmm. But then there's the practical aspect of that. That's a $1.7 billion piece of revenue to our $5.5 billion total general fund revenues. That's about 30%. So what do we cut? And that's where, you know how what that's like when you try to herd all the cats in the legislature. Okay, what are we going to cut? Well, half of that goes to education. K through 12 education. The governor has already said on my show over at Neshoba County Fair, he said, my top priority is to get a teacher raise, $3,000, I think, over 3 years. That's $150 million. So we're actually increasing expenses because our teachers are among the lowest paid. And then if you look at where we spend money in our general fund, it's education, it's Medicaid, the state's portion, which is less than 20% of that right now, of the total Medicaid program.
Those are the two biggest, I think.
And then corrections is next.
Yeah.
And then it's debt service. And the whole rest of government is about 20%. You could eliminate the entire rest of government and still not be able to cover the income tax elimination.
I understand. Are you saying it may be physically or numerically impossible to do this?
No, I'm not saying that at all. What this bill does is, in the initial year, it increases sales taxes.
So phase in.
Right, to cover the big reduction of income taxes. After that, it continues to phase out the income tax It's planned over a 10-year period based on the projections of revenue growth, where some of the revenue growth stays in the general fund, some of it goes to further elimination of income taxes by increasing the standard deduction.
Should there be not a clawback, but a safety valve in there in case the economy goes down? Because you can't do this on a growing economy.
Well, the safety valve is that unless you achieve that revenue growth target, there's no additional decrease of the income tax.
The other part of this is the Senate just going through the motions, or do you think is there anything that can be presented to the Senate that they would acquiesce to, even some of the House?
I don't really have a good sense for that right now. And
my sense is no.
My sense is too, and I think that's largely driven by the lieutenant governor. I don't get the feeling. In full disclosure, Delbert is an old friend, longtime friend. Was my original corporate lawyer. Relied on him, worked with him quite a bit. Have deep respect for him, supported him, etc. I don't get the feeling that, in general, he's behind this. I think he has other plans for government. Here's my fear. My fear is that we're going to hash all this out, and what we're going to do is something sort of token, like get rid of the 4% bracket. We've got rid of the 3% bracket over 3 years. That put $150 a year in everybody's pocket. The 4% bracket over 4 years would put $200 a year in everybody's pocket.
What is the amount of money that would be back into the economy? Have you got that figure? Is it possible to get that figure?
Well, those would all be the economists, I think, that are involved in this process have done some modeling on that, which is what the economic impact of that would be. I think we got to go big and bold, and while I'd love to do this without having to increase sales taxes as an initial offset, if we just said let's just start cutting expenses and thus cut commensurately the income tax, that would take decades, in my view, and would produce very little to those of us right now. It's not going to move the needle. Here's what I'd say. We did something transformational last year that you and I both supported, and that's changing the flag. It's time to do something transformational. That's a cultural transformation. It's time to do something transformational on the economic front. Let's synergize those two. Let's go to the world, to the country, and say Mississippi is here. We're open for business. We have the best environment to do business in. I think eliminating the income tax through this methodology is the best way to achieve that.
I think in talking to the lieutenant governor, when you ask him this question, that even to this point, the income tax is not even the top priority for most businesses when they come in. It's workforce development, but that's arriving at that conclusion in a different way.
I believe those are inextricably linked.
I do too.
I think that is and I've recruited from all over the country, and it's extremely difficult for people to come here.
You can't look at what's going on in the Southeast now with people moving out of California, wanting to move out of New York, moving out of places like this, and at the same time seeing the growth pattern in states all around us that are giving up the personal income tax.